Secrets, the channel for learning about trading and investing. Welcome to daily stock market analysis show where we look at what happened in the market during the day and learn something from it and plan for a better trade for the next day. So here we have a consolidation inside bar day and a weekly expiry, and we have the banking index that's in trouble. Let's analyze and see where we are and what we can expect for the next day, right? So here we have the plain charts of Nifty, just showing it's an inside bar with a small body. Small body is always indecisive. This is more like a spinning top, and spinning top is not 11 unless it is in the top. Small body is indecisive and it's inside that green candle, so it means it's consolidating. The price is consolidating. Here also you have a small body spinning top kind of thing, not at the top, and then inside the previous candle high, which indicate consolidation. Let's quickly go and see the weekly charts on Nifty and the Banknifty. Right. Here we have, and that's what we have been telling this every day. It's the resistance from where we had broken out on October last, and then made all-time highs, and then reversed back 6%, and then we had been consolidating since last 3 weeks, and it's the 4th week now. So the same thing in Banknifty also. We had broken out of a ascending wedge, rounding pattern, breakout, all-time highs, retracement, then consolidation since multiple weeks. Now we are interested in the daily. We have seen the daily, what happened. We already seen that it's doing nothing but inside bar consolidation is what happened. So we didn't lose too much, right? It's just 57 points lost in Nifty, around 29% lost in this. That's 0.30% down. It's inside bar small body, so it's indecisive and consolidating, purely consolidating on a daily basis also. Weekly already it's consolidating. So intraday it was a range bound. If you see the 15-minute charts, it's very clear that we are not doing anything. We are in a range. There is a range that is volatile also, right? It's moved up and then could not sustain and then fall down. But it's within a 70-point range. This is some 300-point range, right? But mostly it was downtrending, but the range bound. Right? You can see that it was downtrending. Banknifty is coming in Nifty, which is more range bound, but it's volatile range bound. So that's the intraday price action that happened. And things head and shoulder is there in the daily charts. You see this is the head and this is the shoulder, very wide one that's broken. Banknifty also the head and shoulder can be seen. The head and shoulder is mainly 11 levels on weekly, but this is on the daily that's appearing mostly. Descending wedge is there. From the breakout, that's not a negative thing. It's a great support. That support is breached, means we are back into where we broke out from, etc. So the good thing is that we are at a. I don't like to repeat the same thing, but the fact is that it is at a very good support. Is a confluence of the natural line moving average, change in polarity, momentum, all of these supports are there. It's at that zone. And we cannot say about it deciding to move. So it won't last for long, is what we can understand, right? It won't last longer. It will break down. The longer it consolidates, the bigger the breakout or breakdown will be. The price action new swing low was formed in Nifty, not in the Banknifty, but that new swing low is exactly the place where the bounces happen. So, but new swing low can be breached only if that 43,000 is clear, is conquered on the Banknifty, and 265 levels and 400 levels has to be cleared before we can say it. And until then, it's consolidating, right? This swing high and this swing low. That's the points. Until the edge of that bridge, you're still in the price action wise, we are still consolidating, doing nothing. Levels remain the same. 18.2 upside, 18.385 again upside. That's a Fibonacci retracement also. 18.142, 18,000, 18,070, 759. All these are support. Nothing has changed. No, one of them is Fibonacci 38, 1870. So these are all these supports on the downside for the Nifty. Banknifty 42, 560 Fibonacci 23 retracement. This is resistance first, and then rounding number 43,000 and the 4280. 833 nearby, that's the previous swing high. So all resistance upside, downside 42 231, first 32 363 is the previous swing low, that's support, and then 41 836 42,000 rounding number, that's all supports. After that bridge, if it again falls, Well, Japan are doing nothing but consolidating. Sideways momentum was indicative of both indices. Uh, Momentum is into sideways, and that sideways and falling. Sideways and falling is what this in both indices. Trend is crossover with bullish zones only in the Nifty, not in the Banknifty. But does not that bullish momentum, that bullish trend in the ADX indicator is not having enough strength. Similarly, the Banknifty, which is still not crossed over, still in the bearish zones of the ADX 90 trend, is not having enough. That also doesn't. So bearishness and bullishness does not have enough strength. So that's exactly what sideways is all about. Which is cooled off slightly 3% nearby, and it is 13.96 below the 14 is where it has fallen on the edge of it. So the thing is that today market is falling, means in the sense closed red inside bar, not falling actually, but still the VIX improved. I mean, the VIX did not rise, the VIX has fallen. So the market falls, VIX also rises up. That did not happen. So that could be indicating that today's move was false expiry only, and tomorrow the real breakout of Nifty can continue. Is a possibility that the bulls can bet on. Long unwinding is what happened. That's bearishness on the future. So that's what the last build up is. Short build up is what is in the Banknifty. So it's bearish future SOI. So option SOI is not relevant because the weekly expiry is going to happen tomorrow. First active trade is going to happen. So you can ignore that. But for just for reference, it is mentioned here at 18,000, 19,000 ranges. So as put and call writing is there. 43,000 points range for the highest put and call writing supply resistances for the January 25th monthly expiry. So for the January expiry, still bullish 1 and very close to 1.89 for the Banknifty. That's where the put call ratio is showing. It will not be that much relevant until it actually gets traded tomorrow. So sectors, the thing is, almost all of them are red. Metal sector is red. FMCG was red, 8.86, 0.56, Pharma 0.28, 0.43 auto. All of them fell less than 0.5%, and FMCG fell a little more. But otherwise, IT and realty, other sectors are close to it. So it's mixed bag. No bullish moments today. It is flattish moments. IT is in the bullish momentum. Others are all in the sideways momentum. So across the sector, bearishness has not happened yet. But heavyweights, we have trouble. ICICI and Kotak Bank, the bearish momentum, and others are all in the sideways momentum. So this is due to a fair selling that happened. ICICI Kotak for simply no reason. It's bearish. HDFC had done today good. Both of them. That's less than 0.5% up move, but it did move up and close green. That was only one that closed green, but Kodak lost. Lines, Infi, TCS, everything lost less than 0.5%. Kodak lost big, it's more near to 2% fall happened in the Kodak Bank. So that's one of the heavyweights perform. So heavyweights are getting banked. The heavyweights are not getting bought is why the market is not moving. Across sector selling is not there. For a change, if institutions, foreign institutions had bought today 400 crores nearby, but remember that it is only 2 times they have bought in the last 19 days. It was domestic institutions who were buying almost all the days except for 1 or 2, and today they sold. They took very less, 159 crores of selling in the cash. Crude is falling again, less than 80, which is good. It's in the sideways momentum, so as long as it does not spike above the 1900, it should be fine. So once again, it has fallen back to the 80. Euro index is bearish momentum. USD INR is also bearish momentum. That is a good thing. It has fallen. Good correction is happening. 102 it has reached nearby for the dollar index. USD INR still not falling that much. It's 81.3 is not that great. Not too far from the 83 plus. So rupee still weak. Dollar is falling down from the neckline of the breakout zone. Gold is rising up. There was some halt in the rising yesterday, but today again it's picking up. And it's near the top of the channel trend line, and anything we'll have to keep close watch if it's able to break out and make a new high, or would it fall back or not. Right. It's a hedging instrument, so normally it spikes when there is trouble in the equity market. Right. So that's what I keep in mind. And right, so on the top there could be resistance here. If it breaks out, then you can have all-time high. Crude, as we discussed, it's falling after hitting the median of the parallel channel. Dollar crashing the neckline and falling down. But rupee is not appreciating too much. It has fallen from the trend line, but it's not appreciating too much. which is flat as of now. US market also. So actually, our market ignored the US market's fall yesterday. Sometimes it does that. Big falls sometimes get ignored. So look at the futures chart. It's falling down and reversing from after hitting the top of the descending wedge. Dow Jones yesterday fell 600 points, and our market did not react as violently or ferociously. So let us see if today, if it continues, then our market should react. Normally, anything like this would have got beaten today. Probably it was an expiry day. That's why we did. For otherwise, we might have reacted more probably. So that's US market's in trouble. It's reversing. That's the Dow Jones that you're seeing. This is the Nasdaq and this is the S&P 500. All of them are getting reversed after hitting the top of the bed. So it is a very crucial zone. You have to keep a close watch if it is once again falling back to support or not. Right. Such big moves happens more than one day. We cannot escape the falls. Right. Major events has been happening today and tomorrow. US Fed speech, inflation data, jobs data, and all this is coming today and tomorrow. So volatility can come in with the fire selling or buying accordingly for the coming days in our market as well. Two stock picks from the long side, SBI Life Insurance and last top. Let's see SBI Life. SBI Life is having a W pattern, double bottom or W pattern breakout is what happening. It is having a very good, nice, 2020 from trend line, which is respected. It's an all-time high zone. This is very crucial. We have to keep tight stop losses because market can once again make one more W. It can again revert back any time. So be cautious. The moment you get a breakout of the all-time high 1336, that's the time you have to enter. So swing trade, momentum is also bullish. Trend is also getting the bull zones. Crossed over to the bull zones. Not with strength, but you have to keep close watch. So tight stops is very much required, but it's bullish and all-time high, and then about to break out from a W pattern, and the rounding pattern also is there. This is a cup pattern, rounding pattern, as well as a W pattern breakout. It should give good risk reward. So that's SBI Life, and then we have Polycab, which is an electrical company, electrical appliances and all that. That's a rectangular breakout. After a long consolidation, it is clearly given a signal of breakout. Momentum is also bullish zones. Trend is also most of the bull zones and rising. Right. So with tight stop loss below this weekly candles low, you can take a trade on the long side, which could give very good risk reward. But remember that is also in the all-time high. Sometimes it may attempt to break out and then fail and then come back and then again take it out. So you may get stopped out, you can enter again, but small losses is okay. So make sure that you have the stop losses properly put in. So January 20 tomorrow, Friday, after analyzing all the different parameters and data, we are concluding. So what happened today is just consolidation in the sell bar. What has been happening for the last many weeks is nothing but consolidation. Overall sideways, what is happening? But 18K is hold. That means market is not ready to fall. Right? 3 days continuous, it is holding that. It's not ready to make another swing low and then break out from there. No. But the banking index is in trouble. It's showing some resistance at the moving average 50 to 20 DMA. That sounds. And we all know that we are at a major support zone down below in the previous week low. If that is broken, then we are done. Down on the downside again. Similarly, the price pattern lower high has to be broken, and then need this to move above the 18300 market. So that's what we are all waiting for. Whether it will go that side or this way, nobody knows. But based on what is shown in the price action yesterday, we had some bullish triggers, even though the momentum had not gone really into the bullish zones. There were some bullish cues. So that's why it took it was kind of a breakout that happened from the descending wedge. So even though Banknifty was weak yesterday, we had a bullish view, a bullish view actually. But today, market did not give a bearish view, but a flattish consolidation. So probably tomorrow it may break out. Today is an expiry also. So price is less than, but that possibility is there. But still, I am based on today's view. What is it showing? I am giving a bearish view, right? But I may be wrong. It's a very good support zone. It failed to break out further following yesterday's good up move. But tomorrow it may do. It may go wrong. That's okay. But what chart is showing is what we believe. Price is less than moving average. Bollinger sideways. Momentum sideways. Trend weak. Lagging index. Fyers not in buying mode. Rupee is weak. US market at resistance reversing. These all are risk areas, and then it could take market back to square one. So market view is mild bearish, as I said. So VIX is not spiked up today. So that is also in favor of the bulls. We had a very confluential support zone, so it's also good. So 17,500, 18,500 for the Nifty, lower and upper limits, 41,500 and 43,500 for the Banknifty. So this is the levels that we will look out for the medium term. Right. So always have hedge positions and protect the capital, and then cut short your positions if it is spiking about 20. So long-term investments, use option strategies to get rental incomes. Links are there in the playlist. Check out that strategic option trading strategies that can be used for investment also. So that's all. My view is mild bearish, but we are at a very good support zone. There is a very chance that it can bounce up. So it may continue to sound right, and so no concrete. Only good support is what we can see. Concrete signal of bullishness was there yesterday. Today it's disappeared. So we'll have to wait for another day. We may miss out having a wrong view, but that's fine. And so that's if this video has helped you to analyze, understand, and have more clarity in the market and have a better play plan, it has helped you in some way in having a trade plan for the next day. Please don't watch without subscribing, please. And share it to your friends, colleagues, everyone. We need more subscribers because that's the only thing that you can keep us motivated. We have very low subscriptions, if you see, in spite of providing the content every day. And thanks for watching. Happy trading, happy learning, happy investing. Bye bye.